All right, we're going to talk about 3 more policy provisions in this video. We're going to talk about consideration. We're going to talk about ownership rights and the owner's rights of the policy, the owner of the policy's rights. And we're going to talk about assignments. So consideration in the policy provisions is really like, what is each side putting up? So what are they offering? Okay, now the insured, the person whose life is being insured, they are offering in the consideration a promise that they will pay the premium every month or every year or whatever the premium payment mode is, how frequently they pay it. And also that everything they said in the application is truthful and that everything was done, it was true and correct to the best of their knowledge and belief. Okay? So those are the 2 things in the consideration for the insured. And for the insurer, the insurance carrier, in the consideration, it's their promise to pay the claim if the insured dies. Okay? Now, next we move on to ownership rights and owner's rights. Now, there's really 4 parties in the purchase of a life insurance policy. So there's the owner. By the way, like the video, subscribe to my channel, and turn on post notifications if you find these videos valuable to you in helping you pass your insurance pre-licensing course. So you have a free look period. So owner's rights. So there's 4 parties in a policy, involved in a life insurance policy. So there's the insurer, which is the insurance company. There's the policy owner. There's the insured, and there's the beneficiary. Now, a lot of times the insured and the policy owner are the same 2 people. Also, sometimes there's a payor. So sometimes there's someone separate who pays the policy. But for your licensing exam, all you really got to know is that there's an insurance company, there's the person who's insured, there's the person who owns the policy, and then there's the beneficiary, the person who gets the money when the insured dies. Okay? So the only one who can really make changes to the policy is the policy owner. So the policy owner has exclusive rights to that policy, meaning they can change the beneficiary. They can receive living benefits like the terminal illness benefit in the policy where the money can be advanced to the owner if the insured is terminally ill. They have access to cash value. They can select the benefit payout option, meaning do they want it to be lump sum or do they want it to be paid in overtime where the beneficiary gets payment installments. A lot of times they pay the policy premiums, and the policy owner has to have insurable interest in the person who the insurance is on when that person applies for insurance. So what insurable interest means, I have another video on this, but it really just means that if the insured, and you can search for it on my channel, it really just means that the person who's taking out the insurance on the insured has to have some vested interest in that person dying. Like they're going to sustain a loss if that person dies. So obviously, if the person getting the insurance is the owner and the insured, right? If the insured and the owner are the same person, like I'm taking out insurance on myself, then obviously I have insurable interest on myself. So what that means is like, I can't just go get life insurance on Jeff Bezos because he's rich. I can't just do that. I could get life insurance on Jeff Bezos if I was on the board of Amazon, because if he dies, then I want to make sure that he can be replaced. His human life value can be replaced. But you can't just go get life insurance on anybody. So they pay the policy premiums. And if the insured is not the policy owner, if someone else owned the policy, that's called third-party ownership. So a lot of times that happens, like if a parent gets a policy on a child, the parent owned the policy, the child is the insured, it's third-party ownership because someone other than the insured is owning the policy. Now, there is assignment of rights, so an assignment of ownership. So the owner of the insurance policy can transfer ownership assignment. They can transfer assignment of ownership to someone else. Now, they can do this completely, and that's like complete, full transfer. That's an absolute assignment, okay? And it has to be done in writing. So this doesn't say I own a policy on my son. If I had a child, I own the policy on my son. I could transfer the ownership to his mother, and it would not change the fact that he is insured. It just changes the owner of the policy. So at that point, I would no longer have access to the cash value. I couldn't change the beneficiary. She could. Okay, so you can transfer ownership in an absolute way when you transfer all rights of the policy. Now, there's an assignment provision of a policy that explains all this stuff. And you can also do collateral assignment. So collateral assignment involves partial transfer of rights. So this can usually be done to secure a loan or a transaction. So for example, say I have $1 million life insurance policy out on myself, okay? I have $1 million policy out on myself, and I want to transfer ownership, partial ownership to the bank so that they can know that they're going to be the beneficiary of that money if they die. If I die, then I can do that to secure a loan, right? So say I get a big life insurance policy and I want to get a loan out. A lot of banks will require this if you take very, very large loans for you to get a life insurance policy. That way, if you die, they can have the money to satisfy what's remaining in the loan. So then once it's only partial assignment, collateral assignment. It's only a partial transfer of rights. Remember, it's called collateral assignment because the insurance policy is at like collateral for the loan in the event of your death. Once the debt or loan is repaid, the assigned rights are returned to the policy owner. So it's like a policy. You can partially transfer rights to someone under contingency that once that debt or loan is paid, then the rights come back. So I hope that helped you guys. If you look up right here, you are going to see a video that explains all the different types of life insurance policies that you can get. So and that you're going to need to know for your life insurance exam course.